Hey everybody, I'm Ernie from Shark Investment Research. Well, I hope you're thirsty because today we're looking at the beverage industry. Now, we've got three very interesting contenders in the dividend world. One of them is a pure play beverage, one is an alcohol company, and one has a mix of beverages and snacks. I'm sure you know who we're talking about. Come on, let's dive in and drink it up. Before we get started, just a quick reminder, there's 6 ways that a company can make it onto our list. They either have to have increasing cash flow, earnings, or dividends per share for the last 17 years, or with cash flow and earnings, they are allowed one flat or one negative year, and with dividends, one flat year only. Now, our focus is dividends, so if they're not throwing off something better than the average, we're not going to be paying much attention to them. All right, come on, let's dive in and see what we got going in the beverage world. Well, we're going to start out with Brown-Foreman. Their ticker symbol is BFB. This yield isn't much to write home about at 1%, but it's on $76.40. You're going to recognize Brown-Foreman products. They're in the spirits market. All right, so that's Jack Daniels, Finlandia, and Korbel. They are not qualified in cash flow per share or earnings per share, but they are a Div 0. So 17 years of increasing dividends per share. All right, here's what the long-term trend looks like for them. And you can see that's a nice, clean, for the most part, uphill slope, good positive slope on both the cash flow and earnings, and the dividends look nice and smooth. Here's the year-to-year changes, so here you can see why they were thrown out for cash flow and earnings consideration, but dividends per share always above the 0 line. All right, our next contender, I'd say needs no introduction, but then you would know who we're talking about. It's Coca-Cola, of course. Now, Coca-Cola, I've got them in green because I own shares in Coca-Cola. Their ticker is KO. Their yield is 3.4%, and that's on $49.38 a share. Now, remember, in addition to Coca-Cola and Diet Coke, you've got Sprite, Fanta, Fresca, Dasani, Glacial Vitamin Water, Powerade, and Minute Maid under this name. They are not qualified in cash flow or earnings per share, but they are a Div 0. 17 years of increasing dividends per share. They've actually been a lot longer than that. All right, the long-term trend, they had a real good slope out to around 2012, kind of had some hits there, and they're trying to get it back together again out here. But look at that dividend, nice, smooth, upward trajectory throughout all of that turmoil. Their year-to-year trends help us see that message a little more clearly out here in, their first hit was in 08, and then out here 13, 14, 15. But the dividends have always remained above 0, taking care of their shareholders. All right, now they're included in the beverage companies, but PepsiCo also has quite a few snack kind of things in their portfolio. So you've got Pepsi, Gatorade, and Tropicana, but then you've also got Frito-Lay and Doritos and Ruffles, Lay's, Walker's, Smith's, Sabritas. So, if you got the munchies and you want a soda to go along with it, they got you covered, right? Their ticker is PEP, and their dividend yield is 3%. That's on $137.93. By the way, all of this data is effective 16 October 2020. Just like our predecessors, they are not qualified in cash flow or earnings, but they are a Div 0. So also 17 years of increasing dividends per share, no flat years in there. Their long-term trend looks a little better than what we've seen. Couple of ups and downs there, but overall a nice steady upward trend on all three fronts. Here's their year-to-year trends. 07, 11, 13, 18 were took some hits, but boy, look at those dividends. They're always up there. All right, well, let's lay them out one on top of the other. Take a look at how they compare. There we are with cash flow per share. Now we've got PepsiCo in the purple dashes. Coca-Cola is the red dots. And Brown-Foreman is the blue solid line. Here you can see Pepsi-Cola outperforming Coke and Brown-Foreman. Earnings per share, once again, we've got Pepsi outperforming Coke, who's outperforming Brown-Foreman, except right here in 19. All right, but we're interested in those dividends. So how do the dividends stack up? Well, there you go. Pepsi outperforming as a 3% on $137.93. But once again, look at this now. Coke is at 3.4%, and that's on $49.38. So you're actually got a better dividend going with Coke, and it's a little bit cheaper buy-in too. So this might be more along the lines for some investors. Brown-Foreman, if you really want to have a sin stock in there, not a bad place to go. At 1% though is nothing to write home about. Even with it being on $76, it's still only a 1% dividend. I think there's probably better places to look, and Coke and Pepsi are certainly two of them. Well, I would love to know what you're thinking in the world of beverage companies, in particular in the battle Coke and Pepsi. It's more than just about the soft drink. Do you own Coke or Pepsi, or do you own them both? Playing one against the other is fine. Hey, if you're enjoying these dividend stock analysis and comparison videos, please go ahead and give me a thumbs up and hit that subscribe button. That's that little red one down there in the lower right-hand corner. And make sure you tell your friends too, so that they can be better informed investors. Remember, I'm not giving you the answer. I'm just helping to narrow the field down a little bit as you try to make some decisions on the dividend companies that you're going to have in your portfolio.